There are three phone calls that millions of Americans over the age of 65 are not making right now that, when added together, can put an extra $540 a month back into their Social Security check. Three phone calls. Not complicated paperwork, not hours of research, not a lawyer. Three simple phone calls to three government offices, asking them specific questions that almost nobody ever thinks to ask in the first place. And I want to be direct with you before we go a single sentence further, because there is something I hear constantly that I want to clear up right now while you are still watching. People hear a video like this and immediately sort themselves into one of two groups. The first group thinks this is for seniors who are struggling. If they are comfortable, if they have some savings and their bills are paid, they figure this list is for someone worse off than they are, and they click away. The second group is on a fixed income, living mostly on their Social Security check, and they have heard so many times that the good programs are for someone else that they have stopped listening altogether. I want you both to stay. I want you both to stay because I am going to walk through every single one of these three phone calls with you. And by the end of this video, you are going to know exactly which group each one helps and exactly how to make that call yourself. The people who are comfortable have often been losing money for years. The people on fixed income often qualify for far more than they have ever been told. In my work as a benefits and retirement counselor for more than a decade now, the single most consistent thing I have seen is not people making reckless decisions with their money. It is careful, responsible people who did everything right their entire lives. They worked hard. They raised their families. They paid their taxes. They saved what they could. And now, in retirement, they are quietly overpaying and quietly undercollecting on the benefits they earned because nobody ever sat down and explained the rules to them in plain English. That is what today's video is about. Plain English, real numbers, real fixes, and three phone calls that you can make this week before another month's check goes out the door at the wrong amount. I need you to understand one idea before we go any further, because this one idea is the key to everything else. Being legally entitled to relief and actually receiving that relief are two completely different things. The system is not designed to give this money back to you automatically. It keeps collecting, it keeps deducting, it keeps charging until you know the rule exists and until you take action to claim what is yours. The gap between what you are owed and what you receive is not luck, and it is not politics. That gap is information. And information is exactly what this video gives you, one phone call at a time. The $540 I just mentioned is not a made-up number. That is the combined average amount that people came back to my office with after making these three calls and applying the fixes I am about to describe. Some got more, some got less. But for almost everyone who followed through, the number was not small and the change was not temporary. It was every single month going forward. So let's begin with the first phone call, because this is the one I see people get wrong more often than any other. It surprises almost everyone when they first hear it, because the problem is not that you are not collecting enough Social Security. The problem is that the government is taking too much out of your check each month before it ever lands in your bank account. Federal income tax. That is the first phone call, and it goes to your local Social Security office or to the main line at 1-800-772-1213. Here is how it works and why so many seniors overpay. When you first started receiving Social Security, you filled out a form. It is called Form W-4V. That form tells the Social Security Administration what percentage of your monthly benefit you want withheld for federal taxes. Most people never think about this form again. Many people, when they first signed up for their benefits, had the Social Security office agent just check a box for them. The default box, often marked 20% or 15%, gets selected and then quietly takes a chunk out of your check every single month for the rest of your life. Now, in some cases, that withholding is correct. If you have other income, if you have a pension, if you have significant retirement account withdrawals, you may genuinely owe federal taxes, and you should keep having some withheld. But here is the thing that almost nobody realizes. For a huge number of retirees, the income from Social Security alone does not require them to owe any federal income tax at all, especially after you add in the standard deduction and the extra amount the IRS lets seniors subtract once they reach age 65. When that is the case, having money withheld every month is not helping you. It is just giving the federal government an interest-free loan on your money out of every check until you file your tax return next April and slowly get it back. I worked with a gentleman named Harold from Tulsa, Oklahoma. He was 73 years old, a retired postal worker living on his Social Security check and a small pension. He had been having 15% withheld from his monthly benefit for 9 years. 9 years, that is 108 withholdings. When we sat down and did the math together, we realized that his total income for the year was well below the line where federal tax actually starts. He was not required to have a single dollar withheld. He was essentially sending the IRS a little over $140 every month, 12 months a year, and then getting that same money back months later when he filed his tax return in the spring. By the time we were finished, Harold had filed a new Form W-4V. He changed his withholding to 0%. His very next check, the one that arrived the following month, was $147 higher than the check he had been getting for the last 9 years. Every month after that, the same. That is the first phone call. You call the Social Security Administration. Ask them to send you a new Form W-4V. Or in many cases, the agent will simply walk you through the change right there on the phone. You decide what percentage you want withheld. 0 is a legal and perfectly reasonable choice if your income does not require you to owe tax. Take that extra money home every month instead of lending it to the government interest-free. Now here is the second phone call, and this is the one that tends to shock people the most, because it is the call that brings the largest single number of dollars back into their pocket each month. It also goes to the Social Security Administration, but it has to do with Medicare, not with your Social Security check itself. Stay with me here because the connection is going to become very clear in about 30 seconds. Medicare is the federal health insurance program that almost every American over the age of 65 is enrolled in automatically. You pay a premium for Medicare Part B, which covers doctor visits and outpatient care, and a separate premium for Part D, which covers prescription drugs. In many cases, those premiums are automatically deducted directly from your monthly Social Security check. So even if your benefit amount is correct, the amount that hits your bank account each month is your benefit minus your Medicare premiums. Now, for most people, the standard premium for Medicare Part B in 2025 is around $185 a month, and Part D premiums vary by plan. But there is a second layer on top of that standard premium that the majority of seniors do not even know exists. And it is the reason so many of them are quietly paying $200, $300, even $400 extra dollars a month for their Medicare coverage. It is called the Income-Related Monthly Adjustment Amount. You will see it written as IRMAA. That is the official acronym. And once I explain what it is in plain English, you are going to understand why this second phone call matters so much. IRMAA is an extra charge that gets added to your Medicare Part B premium and your Part D premium if your income is above a certain threshold. The threshold for a single senior in 2025 is roughly $106,000 per year. For a married couple, it is roughly $212,000 per year. If your income is below that line, you pay the standard premium. If it is above that line, you pay an extra surcharge ranging from about $70 a month all the way up to over $400 a month on top of the standard premium. And here is the part that gets people. Medicare does not look at your income from this year to decide whether you owe IRMAA. Medicare looks at your income from 2 years ago. It is based on the adjusted gross income that you reported on your federal tax return from 2 years back. That means if your income has changed significantly since then, and for many retirees it has because they stopped working, Medicare may still be charging you based on money you are no longer earning. I worked with a client named Patricia from Sarasota, Florida. She was 68 years old. She had retired 2 years earlier from her job as a school administrator. Her last working year, when she filed her tax return, showed an adjusted gross income of $148,000 because she had worked a full year and collected her salary before retiring. That put her income above the IRMAA threshold. The following year, she did not work at all. Her only income was her Social Security check and a small retirement account withdrawal. But because Medicare was looking at her old tax return from 2 years back, she was being charged an IRMAA surcharge of over $400 a month on top of her standard Medicare premium. That surcharge was being automatically deducted from her Social Security check. So every month before Patricia's check even arrived in her account, $400 were being removed and sent to Medicare for 2 years, without her realizing that she had the right to appeal it. The fix is the second phone call. You call the Social Security Administration and you ask them to send you Form SSA 44. That form has a long official name, but what it really says in plain English is, my life changed and my income dropped, and I want Medicare to recalculate my premium. The form lists specific life-changing events that qualify. Retirement is one of them. Death of a spouse is another. Divorce, reduction in work hours, loss of income from a pension. When you fill out the form, you explain what changed. You include documentation, usually your most recent tax return showing the lower income, and you submit it. The Social Security Administration reviews it, and if the change qualifies, they recalculate your IRMAA surcharge based on your current income rather than your income from 2 years ago. The change does not always happen instantly. It sometimes takes 60 to 90 days. But when it goes into effect, the extra surcharge stops being taken out of your check. For Patricia, the over $400 a month she had been losing disappeared. Her Social Security check, the actual amount that showed up in her bank account every month, went up by over $380 from that point forward. That is the second phone call. You call the Social Security Administration. You ask for Form SSA 44. You fill it out, you send it in, you stop paying an extra Medicare surcharge that is based on income you no longer have. Now, I want to make sure I am clear about something because this is important. The IRMAA appeal is not a trick. It is not a loophole. It is the explicit written policy of the Social Security Administration. The form exists precisely so that people whose income has permanently dropped can stop being charged as if they were still earning that higher income. The Centers for Medicare and Medicaid Services have published the thresholds. The Social Security Administration has published the form. The process is written into federal regulation. It is one of the most straightforward things a senior can do to lower their Medicare costs. And yet, according to estimates from multiple nonprofit senior advocacy organizations, somewhere between 70 and 80% of retirees who have experienced a qualifying life-changing event and who are still paying the IRMAA surcharge never file the appeal. They keep paying it every month, deducted right out of their check, often for years, simply because nobody sat down and showed them this second phone call. Now we come to the third phone call, and this one is different from the first two because it is the call that can actually increase the size of your monthly Social Security benefit itself, not by reducing what gets taken out, not by reducing a Medicare surcharge, but by correcting the underlying calculation that the Social Security Administration used to decide how much to pay you in the first place. The third phone call goes to the Social Security Administration as well. Every single one of these three phone calls goes to the same agency, and that is part of why this is such a powerful piece of information. You do not need to navigate three different bureaucracies. You need to make three phone calls to one agency about three different programs and walk away with an average of about $540 more in your monthly check. The third call is about your earnings record. Every dollar you earned during your working years, every W-2 wage, every self-employment tax record gets reported to the Social Security Administration and used to calculate the amount of your monthly benefit when you retire. The longer you worked, the more you earned each year on average over your 35 highest earning years, and the older you were when you claimed your benefit, all of those factors go into the calculation. The Social Security Administration is supposed to track every dollar correctly. In theory, your earnings record should be a perfect historical record of your entire career. In reality, it is not always perfect. Mistakes happen. W-2 wages get reported under the wrong Social Security number. Self-employment income gets missed. Years of work at a particular employer get attributed to the wrong employer record. Wages get reported late. When any of those things happen, your lifetime average earnings look lower than they actually were. And because that is the number the Social Security Administration uses to calculate your monthly benefit, a single missing year of reported wages can quietly reduce your monthly check by $50, $100, $200 or more for the rest of your life. I worked with a woman named Gloria. She was 71 years old, living in Birmingham, Alabama. She had worked for 38 years as a registered nurse at a large regional hospital system before she retired. When we pulled up her full Social Security earnings record together on a printout from the local Social Security office, we noticed that one particular year, about halfway through her career, showed almost no reported wages. That year, she had worked full time. She remembered the year clearly because her daughter had started kindergarten that year, but on her earnings record, it was basically blank. When we dug into why, we discovered that the hospital system she worked for that year had gone through a corporate merger, and during the transition period, her W-2 wages had been reported under a different employer identification number that was not properly linked back to her personal earnings record. The wages had been earned, they had been taxed, they had been paid in, but they were not reflected in the Social Security Administration's calculation of her benefit. We filed what is called a correction of earnings record, supported by her old W-2 form for that year, copies of her pay stubs, and a statement from the employer confirming she had worked there during that period. The Social Security Administration reviewed the correction, accepted it, and Gloria's monthly benefit went up by $162 per month, with back pay going back 12 months in a single lump sum. That is the third phone call. You walk into your local Social Security office, or you call the main number, and you say the words, "I want to review my full earnings record all the way back to the beginning, line by line." They will either mail it to you, or in many cases, pull it up while you are on the phone. You compare it to what you actually remember earning each year. If anything looks wrong, anything missing, anything lower than it should be, you have the right to request a correction. You supply the documentation, and if it verifies, your benefit is recalculated going forward. Sometimes you also get a lump sum for the months that were too low. Now, let me tie all three of these phone calls together because the pattern matters as much as the individual fixes. In every single case I just described, the money did not come back to these people automatically. Harold was not getting back the $147 a month he had been over withheld until he filed the new Form W-4V. Patricia was not getting back the $380 a month she had been overcharged on her Medicare premium until she filed Form SSA-44. Gloria was not getting back the $162 a month in her actual benefit that she had always been owed until she reviewed her earnings record and requested a correction. The system is not designed to give this money back to you on its own. Every one of these mismatches continues, every single month deducted from your check until you know the rule exists and you take action to claim what you are owed. That is the lesson. That is the one idea that ties together all three of these phone calls. And it is the reason I am so passionate about putting this information in front of as many seniors as possible. The $540 number I used at the beginning of this video is the combined monthly amount these three fixes typically generate in my experience. Sometimes it is more, sometimes less. It depends entirely on your specific situation, your income, your earnings history, and what is currently being taken out of your check. But for the overwhelming majority of seniors I have worked with who have made all three calls, the number falls somewhere between $400 and $700 a month. Over the course of a year, that is thousands of dollars. Over the course of 10 years, that is tens of thousands of dollars. And every single dollar of it is money that the system was taking out of your check or failing to give you in the first place, even though the rules clearly say you should have it. That is the thing I want you to hold on to. These phone calls are not charity. They are not handouts. They are not asking anybody for a favor. They are you claiming benefits you are legally entitled to, fixing withholdings that are overcharging you, appealing surcharges that are based on income you no longer earn, and correcting earnings records that the federal government simply got wrong. Every single one of these fixes is something you walk away with money from every single month for the rest of your life. So here's what you do starting this week if you want to take action on all three of these. First, make call number 1, dial 1-800-772-1213, the main Social Security Administration number. When you reach an agent, say the words, "I want to review and change my federal tax withholding from my Social Security check. I would like a new Form W-4V sent to me, or I want to change the percentage today." They will walk you through the options. If your only income is your Social Security check and a small pension or retirement account, you will very likely want to set the withholding at 0. If you have other substantial income, Talk with a tax professional about the right percentage, but at minimum, you can review whether your current withholding is reasonable based on your current situation, not your situation from 10 years ago. Second, make call number 2. Same number if you want, or walk into your local Social Security office in person. Say the words, "I want to appeal my Medicare IRMAA surcharge. I have had a life-changing event. My income has dropped since the tax return you used to calculate my premium. I would like Form SSA 44. They will either walk you through the appeal on the phone or send you the form to fill out. Include documentation of your current lower income and submit it. 60 to 90 days later, if you qualify, the surcharge stops. Third, make call number 3. Same number again or visit the office. Say the words, "I would like a complete copy of my Social Security earnings record, going all the way back to my first year of work. I would like to review it to make sure every employer and every year of earnings is correct." They will either mail you the statement or pull it up on the spot. Walk through every single line, compare it to your memory of where you worked and what you earned each year. If anything looks off, request a correction and supply the supporting documents. If your benefit goes up, the change happens going forward, and you also receive back pay for the months that were underpaid. I have put together a free checklist that walks through every single one of these 3 phone calls step by step. It includes the exact phone number, the exact words to say when you reach the agent, the exact forms you will need, and the exact documents you should have ready before you call. It is called the Senior Benefits Recovery Checklist, and you can get it completely free at our website. The link is right there in the description below this video. Print it out, sit down with it before you make the calls. It will take you less than an hour to go through all of it, and once those 3 calls are done, you will have done more to protect your monthly income than most seniors do in an entire decade. And now I want you to do one more thing for me, and I want to be specific about it. Think of one person in your life who is over 65, a parent, a sibling, a neighbor across the street, a friend from church, someone you see at the grocery store every week, and send them this video. Not because they are struggling, not because they are in trouble, not because they have asked you for financial advice, but because the odds are very, very good that they are paying at least 2 of these 3 issues right now, every single month, for absolutely no reason at all. That one share might put hundreds of dollars back in their account for the rest of their retirement. That is what this channel is here for. That is what this information is for, to close the gap between what you are legally entitled to and what you are actually receiving. If you are not subscribed to this channel yet, do that right now and hit the bell. Every time a rule changes that affects what seniors are owed, I break it down the same way. Plain English, real numbers, real fixes, 3 phone calls at a time. I will see you in the next one. Go make those calls. Do not let another month go by paying money you do not legally owe. The system is not going to tell you, but now you know. And knowing is exactly how this money comes back to you.